Now, even though I've considered myself far from an ultra high yielding investor, considering a lot of my core holdings are names like SCHD, names like Apple stock, or even realty income, I do see few but very rare opportunities in the ultra high yielding landscape, which I've actually been partaking in, buying a few of these ETFs that yield much more than 30%, 50%, or even 75%. Now, in my opinion, most of the ultra high yielders across the market are far too risky and more or less junk in my opinion. But in this video, I'm going to go through 3 specific names and share with you guys why I decided to add them in my long-term portfolio, even though I wouldn't really consider myself much of an ultra high yield investor. All to say that if you're a dividend investor and you want to see a potential massive opportunity, make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, like I mentioned during the intro, I would not consider myself an ultra high yield investor. Most of the names throughout the market that do offer north of 30, 50, 75, or 100% yield are far too risky because of the strategy and or the underlying holdings, in my opinion. Now, the only reason I would invest into an ultra high yielding ETF is simply because I think the underlying has the potential to grow over time, and or I think there's so much income generation to be had from whatever the strategy and underlying is. I think there's the potential to earn back your entire initial investment and play with the house's money later on within, say, 6 to 18 months. Now, again, most of the names for the market are pretty sketchy in my opinion, but funny enough, if you backtest some of these ultra high yielders, some of them have actually outperformed the market at that. Now, the first name that I have been adding to my portfolio as of recently is, of course, the YieldMax MSTR Option Income Strategy ETF, or MSTI, which offers a 90.08% distribution rate. Now, MSTI has been up, it's been down, it's been sort of all over the place as far as price return goes, and really the same thing can be said about the distributions, anywhere from $1.23 per share per month up to around $2.37 per share per month. And then way back last year, we had a few months of over $4 per share per month. Now, the main play with MSTI is, of course, the performance and the implied volatility of MSTR or MicroStrategy, which I'm seeking a small amount of exposure to just to have some Bitcoin exposure, some crypto exposure in my long-term portfolio. Now, let me make this very clear. Anything that offers a 90% yield or anything in this range whatsoever will never become a large part of my long-term portfolio. And I know there's some investors out there, maybe even some of you guys watching this video, that do have massive positions of these names, and all power to you. Do whatever you want, of course, in the market. For me personally, anything that offers exposure to something as risky and as volatile as MSTR, I'm going to play it very safe and have a very small yet fun position. Now, my main hope with MSTI is to be able to dollar cost average down when MSTR drops significantly in the market, which it actually just did as of recently. Dollar cost average down and grab some more shares of MSTI, and then of course hope and pray that those distributions stay somewhat juicy, which they probably will do because the implied volatility with MSTR is still pretty high. And whether you like MSTI or not, the numbers are the numbers on the max time frame. MSTI is up around 272% as far as total return goes. This single ultra high yielding ETF has made many investors a ton of money over this time frame, and again, we'll have to see what it does in the future. Not to mention, over the past 12 months or so, MSTI's paid out around $26 in dividends. The ETF costs under $18 per share as of filming this video, so again, do the math here. This could potentially be a good opportunity, but also is going to be extremely risky. The next ultra high yielder that I've been sort of obsessed with as of recently is MAGGIE, the Magnificent 7 cover call ETF, brought to us by Roundhill. Now, this ETF implements a cover call strategy on the Magnificent 7 stocks, which are pretty volatile, of course, but also historically have done pretty well. Now, Maggie's been on my radar, and I've actually grabbed a few shares of it already. I have it on my daily buy list as of right now because it offers weekly distributions, which obviously have been pretty massive so far. But along with that Magnificent 7 exposure, which I have some exposure to in my portfolio, not as much as I would like, and again, at least historically, has done pretty well. Now, as far as dividends go, Maggie has paid out anywhere from 38 cents per share per week, 37 cents, down to as low as around 27 cents per share per week, which annualized out is still pretty massive. Maggie's pretty new, but the total return is very green. The ETF has done pretty well. It could be an opportunity to look into, or at least add to your watch list. I'm definitely adding some shares of Maggie for some ultra high yield exposure. Now, the last name that I've been buying as of recently, it has actually dropped since I started buying it a little bit. This name is going to be very, very risky. I'm talking about ULTY, the Yieldmax Ultra Option Income Strategy ETF, which has become very, very popular. We're talking an 89% distribution rate, weekly income, and exposure to single stocks that are very, very volatile. Now, the game plan for me with ULTY is the fact that this ETF, as of right now, costs around $6 per share, and as of right now, it's paying around 10 cents per share per week. So in theory, based off of these numbers, of course, these can change in the future, but that would mean that you would need around 60 weeks, which is just over 1 year, to return your entire initial investment and then be playing with the house's money, and at that point be free and clear when it comes to the investment. Now again, this ETF is going to offer exposure to single stocks that do have the potential to grow very quickly and drop very quickly, very fast. So depending on what happens in the market, ETFs like this could make or break your entire portfolio, so be extremely careful when it comes to ETFs like this, along with anything else that you're looking into in the markets. Now, ULTY's total return is not all that great in the max time frame, but if we look at year-to-date total return, not horrible, 13% in the green if we're talking year-to-date. Now, like I said, my real play here is the fact that this ETF, at least over the last year, has paid out around $7 or $8 per share per year in income, which, doing some basic math, that means that it wouldn't take all that long whatsoever to pay back your entire investment and then be playing with the house's money, which is my long-term goal with this one. Again, with ULTY, along with any other ultra high yielders, I'm playing these with very small size just because my risk tolerance is pretty low. So there we have it, guys. Those are several different ultra high yielders that I've not only been watching for a while, but I've actually been adding to my portfolio over the past few weeks. Now again, with any position in the stock market, whether it's a stock, whether it's an ETF, whether it's a low yielder or a ultra high yielder, do some research on whatever names you're looking into, and of course see if it fits what you're looking for. Either way, I think the landscape currently, as far as dividend high income investing goes, it's very, very fun to watch. There's tons of crazy opportunities to be had potentially. And I'm excited to see what happens with those positions along with others over the next year or so. Now, before I do go, I do want to hear from you guys down below. What are some ultra high yield ETFs that I haven't yet looked into, that I need to look into? Drop some of the ticker symbols in my comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.